Hello, everyone. We are here to talk about some things about the current real estate market, and excited to talk to our friend Matt Sharp from U.S. Bank. He is a lender, a broker. What are you?
Lender. Yep.
Lender. Awesome. So we're going to discuss a couple of things about the current market, including interest rates, and maybe go into some of the nuances about the market and some things that buyers would be helpful to know so that they can leverage their buying power and just get to know a little bit more about how they can manage what's going on in the current market. So I guess we'll just start off right off the bat and talk about what you're observing, Matt, in the current market with buyers, I guess, buyers and sellers.
Yeah. So I think what I have noticed is the market seems to be a lot more active so far this year than what maybe originally what I was thinking it was going to look like. It was, I don't know about what you guys were seeing like in the second half of last year, but it was significantly slower than it certainly has been the years prior. And so I was kind of, January is typically kind of a sleepier month. Inventory starts to come on like at the second half of January or early February typically. But it seems like just in the last week or 2 weeks, we've really seen an uptick in activity amongst buyers. A lot more people trying to get pre-approved and actively bidding on houses. So it's been a nice surprise. More active than I was expecting for sure.
Awesome. And what are you seeing in terms of the interest rates? Are buyers still pretty scared about the current interest rates, or are they kind of warming up to the idea that this is still pretty low compared to how it was before?
I think that
Before.
Yeah, that's a good question. So I think people are getting more used to it. Interest rates, we have gotten a little bit of help recently with interest rates. We're seeing interest rates starting to come down a little bit off of their highest levels. Like last fall, we were seeing on conforming, we were seeing rates above 7%, and jumbo, well above 6%. And now we're seeing rates kind of depending on loan program, anywhere from the low to mid fives up to kind of like low sixes, which is a drastic improvement. But still, when interest rates started climbing last year and we started breaking above 5 and 6%, a lot of people I think, found that really difficult. But it seems like people are sort of used to the higher interest rates now. People are welcoming the fact that rates are coming down and interest rates are going to probably continue to go down this year, which will really help buyers out. But yeah, I'm not seeing conversations last year about interest rates going up and going higher were a lot more difficult than talking to clients that are entering the housing market today, and we're talking through rate options. It seems to be I'm not getting that same hesitation or kind of pushback that I was last year.
Interesting. Yeah. I'm curious to know, just generally, are buyers having any issues getting approved at this point?
I think it's kind of like circumstantial. Like with rates coming down, it's certainly becoming easier to qualify people. But interest rates falling or coming down a little bit isn't necessarily going to solve like an approvability situation for a particular client. But yes, like interest rates coming down will in theory make it easier for people to qualify or qualify for a higher loan amount, which will then stretch their buying power. And that was kind of one of the main frustrations we saw last year is interest rates went up so fast. They went up, 2 to 3% in like a 6 month period. And what that did is that decreased a lot of people's buying power and made it so that they couldn't qualify for as high of a price range. And so it forced them to start looking at different houses, different inventory, and that caused serious problems for some people. And now we kind of have the opposite going on where people's buying power is going to be stretched, and new options may become available for people that are looking to buy a house, which is great.
Right.
What would you tell buyers that are sort of on the fence right now, whether to wait a little or get into the market now? those are, you know, questions we get a lot from buyers that have seen the interest rates last year and are now wondering if they should wait or if they, you know, should go for it now.
Yeah, I'm encouraging people that are serious about buying a home and plan to stay there longer term to try to purchase now if the right house comes along. The reason I'm saying that is because because we're forecasting interest rates to trend down this year. If interest rates continue to fall, it's going to become more appealing for people to borrow money to buy a house, and so I think that's going to bring a lot more buyers out into the buyer pool, which is going to increase competition. And rather than maybe bidding against 5 or 6 or 7 offers today on a house, if interest rates drop and more buyers flood into the marketplace, you might be bidding against 10 or 15 offers, and so it's going to make it more difficult to get your offer accepted. It's going to force you to bid higher to get that same house. And so I think there's an opportunity with lower competition still to buy a house at a more reasonable price than you otherwise will when demand continues to pick up and home prices, as a result, home prices will rise.
Mm-hmm. Right.
That answer your question?
Yes.
Hopefully?
Yeah.
Right.
Okay. All right, cool.
And I guess, for Bay Area housing, even though the interest rates are high, what I have personally seen is that even though price points are coming down a little, they're still pretty competitive because the inventory is still low. Do you have anything that you want to offer and say about that?
Just in terms of like inventory levels and kind of how that impacts home values?
Correct.
So there's still while there is a little bit more inventory, perhaps, now than there is in normal market January, there's still a huge imbalance of the amount of inventory available versus the amount of buyers out there that want to buy homes. Like there's still a huge imbalance. And so, to try and put it in perspective, like in 2008, when we saw, the housing crash, there was more than 4x the amount of inventory than there is today. So there's a massive shortage of inventory, which, as long as there's low inventory and strong demand, you're going to have an environment where home prices are going to continue to rise. Right,
because that's definitely one of the most common conversations that we're having now with our buyers, are just that a concern that maybe if pulling the trigger now is too early, that they're waiting for it to come all the way down. And so it's been an interesting thing trying to navigate that and offer these sort of perspectives.
Well, yeah, and to your point, Jerry, one thing that I hear quite a bit is, well, Matt, if you're predicting interest rates to go down, why don't I just wait to buy a house for interest rates to be lower? And I totally understand that way of thinking, but the problem with that is that if you wait, you're going to be competing against more offers, and that same house may cost you more money. So kind of the strategy that I recommend, if you can do it, is try and buy the house that you love today. And if interest rates improve, you'll have the opportunity to refinance and optimize your mortgage to get into a lower rate and payment down the road. So you can kind of have best of both worlds there, like getting the house today at a discounted price and then getting the lower rate later when it's available. If you wait to get the lower rate available, the house you want may cost more money, probably will cost more money.
Right.
Can you, sorry, Jerry, go ahead.
No, go ahead.
One thing I wanted to touch on briefly is, can you do sort of a quick summary of some of these new loan programs that people are maybe not familiar with from last year? Whether it's ARMs or, things that people haven't used prior that have come back on the market now that are really interesting to buyers, especially if they're looking to potentially refinance later or
so outside of just sort of the conventional loan options that like people are most used to, like a 30-year fixed rate mortgage, like that kind of the other stuff that I think the main loan products that we saw pop up in the last year's market, which were just as a result of the changing conditions, were these temporary mortgage rate buy downs, where you can, at least, and I think we'll probably still see some of these situations in today's market, where basically the seller is having a hard time selling the house. The house is sitting on the market, and what they have to do is they have to lower the price to attract buyers and get someone to buy the house. And so what we were doing last year to kind of solve that need was we had these temporary rate buy downs, where the seller would then offer to pay for the buyer to get a lower interest rate temporarily. So maybe for the first 2 years of their mortgage, they have a rate of 2% lower than market rate in the first year, and then 1 year lower in the second year, and then back to market rate. So that was kind of a nice solution, because it helped the seller actually avoid, rather than reducing their price maybe $50,000 or $100,000, they would maybe give $25,000 or $20,000 credit to the buyer and not actually have to drop their price. So they actually net more on their sale. And then the buyer, what it allows it allows the buyer to stretch higher on purchase price, but keep their payments lower in the near term for the first few years. And so that was kind of a creative product option that emerged into the markets as a result of the conditions. And those are still out there, and people are still utilizing them. I think another thing we're seeing more common too is people utilizing ARMs and interest-only ARMs, which offer still a good amount of fixed rate security for buyers, but also offer more flexible, lower payment options. So it allows you to kind of buy more house with lower payments, which helps kind of solve that affordability problem that we were seeing last year with higher interest rates, and still probably going to see a little bit the first half of this year.
Awesome. So, and I guess to kind of wrap things up in a bow here, if I were a buyer even considering buying right now, what are the kind of first steps? What do I do first?
Yeah. That's a great question. I mean, I think it's important to talk to a few different lenders to help to explore your options and figure out what you can qualify for and what your maximum purchasing power is. And ask them for any advice that they may have about alternative strategies or loan programs that they may want to consider when they're evaluating different loan programs and how to go about their purchase. I think that's kind of it. I think the most important thing is understanding what you can, what's possible and what you can do, and don't make assumptions. There's all different sorts of wonderful loan programs out there offered by different lenders, and you kind of don't know what you don't know until you talk to these folks and find out. So figure out what your buying power looks like, figure out what you can qualify for, and most importantly, communicate with the lender what sort of payments you feel comfortable with and what you feel like is sustainable for you, and or your family. And then they can try and help match you up to an appropriate loan program that meets your needs and helps you get the house you want.
Perfect. That's super helpful. And the intention of having this little chat with you is to put more information out there and kind of quiet all the noise that's happening around all the fear headlines, right? So there's still, I think, if you have enough information and enough education, you can leverage that and figure out if this is a good time for you to buy, right? So like you said, you don't know what you don't know. So we're trying to put as much information out there so that you do know some things. So we will put your contact information in the caption somewhere on this post, and make sure that people get in touch with you to ask you any questions. We'll put our contact information as well. I didn't introduce ourselves. This is Lena, and I don't know which part of the screen she's on, but it's Lena and Jerry. We're here from Winkler Real Estate Group, and we are Team Latitude 38. And thank you so much for sharing that little bit. Is there anything that you would like to leave, any last notes or anything that might be helpful?
I don't think so. I think we covered a good amount, and I think listen to your local real estate and lender experts. There's a lot of bad information out there in the news, and just because they're broadcasting it on television or on the radio, it doesn't necessarily mean that it's from a credible or trustworthy source. really lean on your local industry experts, because they'll often have more accurate information that will help you make better, more informed decisions. So
Awesome. Awesome. Thank you so much, Matt, for your time.
yeah, of course. Yeah, it was fun. Thanks, guys.